Welcome, everyone. We're giving a few minutes so that everybody can log into the webinar today. Bienvenidos a todos. Estamos esperando unos minutos más para que todos puedan entrar al webinar de hoy. Gracias. Hi, everyone. We're going to wait just a couple more minutes. Hola a todos. Estamos esperando unos minutos más. Gracias. Okay, let's begin. Martin or Mark, if you want to do me the favor of interpreting. Hello, everybody, and welcome to Oregon Consumer Justice's webinar on the return to repayment.
Hola a todos y bienvenidos al Oregon Consumer Justices para los pagos y para la devolución al pago.
We have interpretation services today for the webinar, and I will be turning that on in just a moment, but wanted to advise people first.
Contaremos con servicios de interpretación en simultáneo para el webinario de hoy, pero quería antes que nada advertirles y explicarles sobre cómo funciona.
And let me start with the presentation as well.
Y de paso empiezo con la presentación también.
So to access in Spanish language interpretation, which is what we have available today, there is a small globe, or there will be shortly if you don't see it yet, at the bottom of your screen.
Así que para acceder a la interpretación en simultáneo en el día de hoy, van a ver, si todavía no lo pueden ver, pero en breve van a poder ver un icono de esta forma, con forma de globo terráqueo.
If you would like to hear today's presentation interpreted into Spanish, click on that globe and choose Spanish.
Este icono va a estar en la parte inferior de su pantalla. Una vez que lo ubiquen y le hagan clic, van a poder ver las opciones de idiomas. En este caso, si desean escuchar la interpretación al español en simultáneo, seleccionen español o Spanish.
Please, if you would like to continue to hear it in English, which the presentation will be in, do not choose the interpretation function and click on the English, there won't be audio in that channel.
Si, si desean escuchar la presentación en su idioma original, no hace falta que hagan clic en el canal de inglés. Por favor, les pedimos no hagan clic en ese canal porque no va a haber nadie hablando en ese canal. Simplemente quédense como están sin seleccionar nada y escuchan el sonido de piso.
And lastly, if you have issues with the Spanish interpretation, the interpreters cannot hear you if you speak. If the Spanish interpreters cannot hear you when you speak, and so please use the Q&A function that you'll see at the bottom of the screen.
Si llegaran a tener, por último, si llegaran a tener inconvenientes con la interpretación, como van a estar en mudo y los intérpretes no van a poder escucharlos cuando hablen, por favor, utilicen la función de preguntas y respuestas que el icono dice Q&A, para poder plantear sus consultas o plantear una pregunta. Muchas gracias.
Okay, great. And with that, I'm going to begin the interpretation. So please select Spanish if that's what you'd like to hear today's presentation in.
Dicho eso, arrancará en breve la interpretación en simultáneo y vamos a activar la función. Acuérdense de hacer clic y seleccionar el idioma español o Spanish para poder escuchar al intérprete interpretando simultáneamente. Gracias.
Okay, and with that, it should begin. Okay. Great, and again, if you have issues with the interpretation, please use the Q&A function. Y como decimos, si tienes problemas con la interpretación, favor de usar la función, el botón de Q&A. Thank you, everybody, and welcome to today's webinar. Some logistics that I'd like to cover before we begin. Today's webinar is being recorded and it will be posted online. So folks who maybe can't finish or folks who weren't able to join today will be able to watch in the future. The Spanish interpretation will be recorded as well. So I believe that the posted recording will be available in both English and Spanish. Participants today are muted. And if you have questions, please use the Q&A function. We will be monitoring the Q&A function throughout. And if there are questions that we're able to address during the presentation, we'll address those. There will be a Q&A after, and I'll speak about that in just a moment. That will be an open opportunity for folks to come off mute and ask specific questions about the things that we're talking about today with student loans. The chat function should be enabled today, so feel free to introduce yourselves in the chat if you wish. If you would like follow-up information, we will be sending out some resources and links after this presentation. And if you didn't enter your email to log in today, please drop your email in the chat. And just to be certain, in case there's any errors with the information gathering, please, if you'd like follow-up information, put your email in the chat so we can make sure to send you materials after the fact. The chat is not anonymous, so if you're posting questions in there, it's likely that everybody will be able to see them. So if you do have questions, again, please use the Q&A function. Those questions will just come to us and they won't be shared with the audience generally. So our presenters today, so I will speak very briefly and then get out of the way for Lane Thompson. So my name is Leland Baxter Neal, and I use he, him pronouns. I am the Director of Community Lawyering and Movement Building at Oregon Consumer Justice. Oregon Consumer Justice is a nonprofit here in Oregon that advocates, organizes, and supports litigation to advance a justice movement that puts people first. We aim to ensure that all people have the freedom to thrive and to equitably share in our abundance of resources that we have here in this country and in this state. through the work of advancing consumer protection and justice. And I will now pass it to my colleague, Lane Thompson, who is with the Department of Consumer Business and Services within the Division of Financial Regulation. But in short, we are very lucky in Oregon here to have Lane Thompson as statewide ombuds. Lane will begin presentation shortly. I wanted to just go over, the goals for today. We hope to equip you with information that every borrower needs to successfully navigate this return to repayment for federal student loans. We also are going to provide a basic overview of the different types of repayment plans and provide updates and details on loan cancellation and forgiveness programs. And I wanted to frame why, for Oregon consumer justice, this feels like an important and critical issue. We view student loans and student loan debt as a consumer justice issue. It is the second largest source of debt for Americans after mortgage debt. There's 40 million borrowers who owe $1.7 trillion in debt. This is a massive impact as student loans and the cost of education has, I think in my perspective, become untethered from the reality of what it costs and really from affordability. And the impact of that is that borrowers, particularly recent generations of borrowers, are saddled with massive amounts of debt that limit them from advancing their lives. A recent study found that 74% of Generation Z borrowers and 68% of millennials were delaying major financial decisions because of their student loan debt. 27% delayed saving for emergencies. Another 26% put off saving for retirement. 24% delayed paying off other debt, and 23% put off buying a house. Now, these general and broad impacts are really just the surface, because we know that underneath, student loan debt is a major driver and an impactor of racial disparities in this country. They are both a cause, it is both a cause and consequence of racial disparities, structural racism, and the racial wealth gap in the United States. So at a starting point, we know that at that moment of making a decision about financing education, communities of color, households of color, and white households start at a very different place. Median white households already have 13 times the wealth that a median Black household and 10 times the wealth that a median Latinx household has. And so what you see is that borrowers of color are in a different position. Borrowers of color have to borrow more often and at higher amounts than white workers, even with the same degrees. We know that for borrowers of color, larger percentage of them are unable to get into the schools, perhaps that they want, and end up pushed into private institutions that have worse terms and rates, higher tuition and worse terms of rate as a result of bias in testing and in admissions. Average Black student will take out nearly 50% more debt for a bachelor's degree than white peers. Black borrowers receive contributions from their parents less often and for smaller amounts than white students. The average 58% of Black students receive a parental contribution versus 72% of white students. And that parental contribution, that average parental contribution in Black households is about $4,200, while average white contribution from their parents is $12,000. And we know that as folks enter the job market and work to repay those debts, that the job market continues to exacerbate these disparities, and that 12 years after starting school, over 2/3 of Black students owe more than they initially borrowed, and Black women hold the greatest share of this burden, while Latinx borrowers still owe 83% of their initial balance, compared to white borrowers 12 years after starting school owe only 65% of their original balance. And so with that framing, I want to pass it to Lane Thompson to begin today and to talk about what this return to repayment is, what it means, what borrowers need to know to navigate it successfully. Thank you. And Lane, I'll pass it to you.
Thanks so much, Leland, and thanks for inviting me. Great to see some familiar names on the attendee list today. My name is Lane Thompson, as Leland mentioned, and I work in Oregon's Division of Financial Regulation, which is within the Department of Consumer and Business Services. Got that almost right. So what that really means is that I work for the state of Oregon, and I'm in this newly created position as of a year ago, called Student Loan Ombuds. So I'm here today to talk to you about the return to repayment and kind of what you might be hearing from borrowers, maybe some answers to questions you have for yourself, and then just a little bit about kind of what resources are available. So Leland, if you want to go to the next slide, we'll jump right in. Back one. Perfect, thank you. So the place I like to start with this is really, what is a student loan, right? So that term is used relatively broadly. There are several different things that can be called a student loan. So I kind of just want to start by clarifying the differences there. There are private loans and there are federal student loans. The pause has been on federal loans. So if you or your clients have been paying back their loans, if they've been required to make a payment for the last 3 years, chances are those are private student loans. A private student loan is more or less like any other unsecured loan debt. It's just a personal loan. It's determined by credit score based on debt to income ratio. And as Leland mentioned, the average family contribution, for most folks, they end up with private loans because the expected family contribution on the FAFSA and what the family's actually able to contribute are not the same amount, and private loans tend to fill that gap. So that's usually where the private loans come from. Private loan servicers could be pretty much any financial institution that you could think of, lots of fintech players. Then we have the U.S. Department of Education federal student loans. Those are made by, owned by, serviced by contracts of the Department of Education. So that's what we're going to be talking about mostly today. So I won't go too far in depth about kind of how those work just yet. But the last thing I like to mention in terms of the types of loans are these FFEL, Family Federal Education Loan Program. And these were loans that were made by banks, by private financial institutions, but were insured through the federal government. So they function kind of similar to how maybe an FHA or VA mortgage functions, where there's that guarantee, that insurance from the federal government, but it's actually a private loan product. The last FFEL loan was made in 2010. So we're starting to see fewer of those, but they do still exist. FFEL loans can generally be consolidated with your other federal loans in order to become eligible for a lot of what we'll talk about now. Next slide, thank you. So the pandemic pause, we're talking about a return to repayment. Well, returning from what? Since March of 2020, federal student loans, direct federal student loans have not required repayment. So I think they extended the pause 7 times. There was a lot of us waiting to return to repayment a bunch of different times over the last few years. But in May of this year, as part of the debt ceiling limit, or the debt ceiling deal, rather, they required the return to repayment as one of the negotiated parts of that deal. So it's really happening. We're really returning to repayment. But this does mean that those 40 million borrowers that Leland talked about, most of them have not been required to make a payment in the last 3.5 years. Interest has not been accruing, and those months are counting towards public service loan forgiveness and IDR. So in this return to repayment, interest is accruing. It started accruing this month. Folks will have payments due next month in October, a different date for each borrower or for each servicer, but it will be in October. And there's an on-ramp through October of 2024. All that means is that if folks are missing payments in that first 12 months, they will not face credit consequences for that, which is to say loans are not being reported late for the first 12 months. That's the plan, at least. Next slide, please. So what does that mean, returning to repayment, right? For most people, it really just means being aware and having all the info. So the, number one thing is you want to make sure you know who your servicer is and that they have the correct contact information for you. A bunch of the loans have transferred servicing over the past 3 years. There's also lots of people who graduated from college and are making payments for the first time. So it's really important that you confirm who your servicer is and that you confirm that your contact information is up to date with them. We talk about auto pay because part of the Department of Education's contract is that borrowers get a interest rate incentive for signing up for auto pay. So that's actually going to potentially lower your overall payment if you get into an auto pay plan. You also want to go on to studentaid.gov. Again, studentaid.gov. You want to go on there, sign in, and check out what kind of forgiveness and what kind of repayment options are available. The reason you want to go on there and check is that that's the federal government, the Department of Education's official site for federal student aid. It's where kind of all of the federal student aid benefits are being kept right now. So I would really recommend that everybody just go on there and play with the repayment estimator. It is a really useful tool to kind of look at what different repayment options might be available, which I'm going to talk about a little bit in a second. Next slide, please, Leyland. Oh, and I didn't mention scams on that one, but we'll get back to scams. Watch out for scams. Okay. In terms of the return to repayment, there's kind of 3 new big things to talk about in relation to student debt. So the first one is what they're calling the Fresh Start program. This is the opportunity for anyone who has defaulted, so anybody who is more than 9 months behind on their student debt before March of 2020. Anyone in that category can call their servicer, they can call directly over to this default resolution group. and we have those phone numbers if anybody needs those. And what they do is they're going to take the defaulted loans, bring them back to current, and those loans become eligible for all the federal student loan benefits. So it's a really nice chance for people who may not have ever dealt with their student debt or who are really, really behind to kind of get back to square one where they're being reported on time and they have a direct student loan. The next thing that is a big change that's happened over the last 3 years is what's being called the IDR account adjustment. So this was a response to a pattern of servicers encouraging borrowers to go into a forbearance or a deferment instead of an income-driven repayment plan. So part of the income-driven repayment plan overall, part of that plan is supposed to include cancellation at the end of 20 or 25 years of income-driven payments. At some point, the Department of Education became aware that not very many people were having their loans canceled under the income-driven repayment programs. And so they decided to do a one-time recount, and this is going to apply to every direct federal loan. So everyone who has a direct student loan is going to have this count applied to their account. And they're going to count months in repayment, certain types of forbearances, and they're going to count months on older loans even after those loans have been consolidated. So those first two pieces are basically trying to make sure that folks who have been paying on their loans or not paying because they couldn't afford to have the months towards their IDR cancellation applied. The third part that I talked about with the consolidation, this gets really tricky, so I don't want to get too far into it, but I'll just say this mostly comes back to those FFEL loans. Anyone who has those loans needs to consolidate them into a new direct loan in order to have this adjustment applied. For all of those out there who already have a direct federal loan, this is going to happen automatically. So you may have heard recently about something like 700,000 borrowers who had their debt canceled. That was under this account adjustment. It just happened last month, the first kind of big round of cancellations. So what they're doing is first, they're going to do the account adjustment for anyone who has reached that 20 or 25 year repayment period. And then they're going to go back and do it to every account. So eventually, every person with direct loans will have a little thing that pops up on their student loan account that tells them how many eligible months towards IDR cancellation that they have. So it's a pretty exciting thing. There's some good frequently asked questions on studentaid.gov about that adjustment. I definitely recommend looking at those. And then the third big new announcement is this SAVE plan. So this is a new income-driven repayment plan that is going to increase the floor on protected income, which means that folks get to keep more of their monthly income. It's also going to forgive some loans sooner, and eventually it will also be a smaller percentage of monthly income. It's a really good, affordable plan for a lot of folks, particularly low income people. So I would definitely recommend going to look at the SAVE plan also. All right. Thank you, Leland. Okay. So what kind of plans are there right now? There's really kind of two types of plans. One is the standard repayment plan. That is, you have 10 years of payments. Each payment is the same amount. If you don't do anything, you're on the standard repayment plan. So you come out of school, you have your 6-month grace period, they send you a bill, that's your standard payment. You make that payment for 10 years, your loans are paid off. That's a normal loan, right? So what we also have are these income-driven repayment plans. So income-based, income contingent, income sensitive, those three are more or less the same. The main kind of differences there is which loan types are allowed to use which plans. Again, I don't like to get too into it. It gets pretty in the weeds pretty quickly, but just know that there are different plans for different loan types and different repayment plans. Then those bottom two, the pay as you earn and the what was repay and is now save. Love all these acronyms, right? Those two are a little bit different. They're going to be a smaller percentage of income, and they are also going to treat your income as a married couple a little differently. So part of the reason I always recommend that people use the repayment estimator on studentaid.gov is because it's going to run through what these different payment plans would look like based on your unique loan and income situation. So these are all plans that are available based on the amount of income that you or that your client earns each month. So it's a percentage of that gross income. Next slide, please.
And Lane, we have a question in the chat about the SAVE plan. So someone described that they've used the SAVE plan calculator and it didn't seem to take into account their other debt, and their estimated payment was higher with the SAVE plan. Do you have any thoughts and guidance around kind of what is happening with the calculator right now?
Yeah, so I can say a couple things. The first thing I'll say is that any other debt is not taken into consideration on an income-driven repayment plan. So it really is just your income they're looking at. I spoke to somebody recently who was upset that they don't take into consideration that her taxes get taken out. And, you know, it is based on gross income and only on income, not on cost of living or other debts at all. That being said, there's also been some question of if the calculations that the SAVE calculator are producing are always correct. Some folks who said that the payment that they got projected from there did not seem correct. So, you know, there is a calculation out there. Kind of double check whether or not that was correct. But an important thing about the SAVE plan is that it doesn't cap your payment at the standard repayment. So I'm going to say that again. The SAVE plan does not cap your payment at the standard repayment. So if you're earning a good amount of income, regardless of anything else that's going on, chances are that SAVE payment is going to be relatively high. I think that's all I've got on that.
And Lane, will you say one more time where the alternate calculator, where someone can go to try and do like an alternate calculation for their payment?
Yeah, so, when I said there is a calculation we could do, what I mean by that is that when this plan was announced, they said it will be a certain percentage of income over a certain federal poverty level number. So again, I could go pull those up, exactly what those numbers are, but it would probably be a manual calculation. There's not really anywhere else to go to get another kind of automatic calculation because this is a brand new program. So probably would have to do it on our own.
Great. Thank you, Lane. I'll go to the next slide.
Great. Thank you. Scams. So when I said I'd come back to scams later, this is a really important part of the return to repayment. A lot of kind of people with bad intentions are out there right now because we're returning to repayment. And we know that the Department of Education hasn't always done a great job of making these programs clear or available. And it's kind of opened the door for a pretty big rash of scams and of people kind of trying to take advantage of that confusion. So when we talk about scams, really mostly what it looks like with student loans is somebody contacts you, somebody contacts your client, whoever we're talking about, and they say, I'm calling from so-and-so, we're associated with the Department of Education, and we're going to give you a really quick, great deal if you just pay us $200. None of the programs that I talked about today or am going to be talking about at all require payment up front, by which I mean you do not have to pay to access an income-driven repayment program. You do not have to pay to access public service loan forgiveness. So kind of the main things we tell people to watch out for is urgency. This all takes a pretty long time in student loans. It all goes pretty slowly. So if they say it has to happen now, or this offer is expiring, that is probably a good sign that it's a scam. When we talk about mode of contact, what we mean there is that the Department of Education doesn't have time or staff to be calling and texting all of us. So if you get a call or a text, chances are it's not legitimate. I would hang up and look up your servicer and call them back. Then the last thing on here is the licensing status aspect. So part of the creation of my role at the state of Oregon also created a requirement for student loan servicers who work with Oregon borrowers. So anybody who has a student loan in Oregon that they're paying back, those servicers are now required to have a license to do that servicing. Anybody can look those licenses up. NMLS Consumer Access is where you go to check that license. You can also check that from our website. Division of Financial Regulation has a link over there as well. Next slide. Okay, so I promise we're getting to the end here, y'all. Loan cancellation and forgiveness. So as I'm sure lots of you on the call remember, back in August of 2022, Biden administration announced a blanket cancellation of up to $20,000 for some borrowers. Tons of people applied, applications were being processed, but then it was challenged in court, and ultimately the Supreme Court determined that it was not legally permissible for the debt to be canceled in that way. On the same day or the next day after that SCOTUS decision, the Biden administration announced that they are going to attempt another route. So there is currently a negotiated rulemaking committee that is going to be set up. They just closed the nominations, and dates are posted for when the committee will be meeting. So, it's possible that there could be another type of cancellation announced by the end of this year. So that committee will be coming up, and those are generally accessible to the public. So that blanket cancellation is for now gone. It doesn't exist at the moment, but hopefully, or maybe it will come back. That being said, there is still a fair amount of loan forgiveness options available, and I really want people to be looking at whether or not they're eligible for any of these, because even without that large blanket cancellation, there's a lot that this administration has done to try to kind of encourage people who may be eligible for other types of cancellation. So I mentioned that one-time account adjustment. So as I said, that's going to be applied to everybody's account as long as you have a direct loan. So if you have an FFEL consolidation loan, and the way you would find that out is by logging into studentaid.gov, and you could click on your profile. It has a summary. There's also a button that says download my student data. That's kind of where you'd see if you have an FFEL, but as I mentioned, they're before 2010. If you have an FFEL, you need to consolidate them in order to be eligible for this account adjustment. So the only people who need to take action to have that applied are those FFEL borrowers. Couple other big types of repayment, of cancellation, borrower defense to repayment is the program for people who were defrauded or preyed upon by their schools. So if you were working with somebody who feels that they were misled by their school, I would recommend looking into borrower defense to repayment. There have been a lot of big lawsuits and group cancellations recently for a lot of the for-profit schools under that type of cancellation. There's a total and permanent disability cancellation. So if you maybe work with somebody who is not going to be able to earn income anymore due to a disability, student loans can be discharged through that. And they just made some changes in July of this year to the borrower defense to repayment and total and permanent disability discharge programs that make them a little bit more accessible and in some cases even automate some of the forgiveness. The one other I'll mention here is the TEACH, that's TEACH, another acronym cancellation, and that's certain dollar amount of cancellation is available for teachers after 5 years. So that's a pretty niche one, but I just like to mention that that is also available. Next slide, please. Okay, so this is kind of our last main content slide here. I just kind of want to go into this a little bit for y'all because I think it might be pertinent to some people in the audience here. The Public Service Loan Forgiveness Program has been updated for the modern age, which is to say it kind of works now. The qualifications, the requirements for public service loan forgiveness are these 4 requirements here. So 120 monthly payments. A question I get a lot is if you can make those 120 payments sooner. You can't, only one a month, 120 months of payments. On a qualifying loan, you have to have the direct federal loans. you need to be on a qualifying payment plan and have a qualifying employer. So those payments are any payments you've made on a standard repayment plan or a income-driven repayment plan. So let's just play out a scenario. Why don't we use my own scenario? I started working in public service in 2013. I had a $0 income-driven repayment monthly requirement for those first couple years. I didn't earn very much money, and the Department of Education said it's okay to pay $0. I am now 10 years into repayments, and soon I will be eligible for cancellation because I have worked at a nonprofit or government employer for those 10 years, and because I have a direct federal loan. So if you don't have direct loans, again, you might need to consolidate them in order to be eligible for public service loan forgiveness. A good change that happened recently is that they're now calling any employment over 30 hours per week counts as full-time. And they've also clarified some teaching hours and how they look at that. So people are getting their loans canceled under public service loan forgiveness right now. It used to be that if you consolidated, you lost all your PSLF months, and that's no longer the case. Now, if you consolidate before the end of this year, so go do this now. If you consolidate this year, they will count all of the months that you've made payments on any of those underlying loans towards your ultimate cancellation. Starting next year, it's going to be a weighted average. Again, you can go look that up on studentaid.gov to get more details. Okay, next slide. I think we finally reached the end. I'll hand it back over to you, Leland.
Great. So thanks, everybody. I want to just, while we still got you, Lane, on this, also want to highlight, I think, as we near the end of September and approach October, you know, what's happening right now at the level across the private loan servicers is there's 40 million accounts, individual accounts that have been basically on pause that all of these servicers need to put back into repayment. And I think what we are hearing and seeing already is that is a massive strain on their infrastructure. And as people start getting bills and start getting a look at their payment plans and trying to change payment plans, it's going to just massively increase the amount of work at these servicers' offices to process payment plans and process loan transfers, and call centers are already massively burdened. And so I think the advice that I would probably have, and Lane, speak up if you agree or disagree, is that folks need to be making changes as early as they can, not waiting to address some of this stuff, and just be ready for massive wait times, potentially dropped calls not returned with the centers that handle all of this stuff. Lane, do you have anything to add kind of on what to really anticipate in terms of dealing with this in the next month or 2 or 6 months?
Yeah, no, I would absolutely agree that a lot of it is going to be being proactive. So anything that you can do now, find out what your expected payment is, go read about some of these programs I've been talking about. It is going to be easier to do now than to do later. One of the resources that Megan just put in the chat, thanks for that, Megan, is the DFR website. So if you do see a problem, if your clients are being targeted for scams or they are not getting correct information from their servicers, we want to hear about that at DFR. So we have that email address here, but the complaint form is also up on that DFR site. And those are the kind of times I like to see complaints from borrowers, as if there's something not going the way that it was expected to.
Thanks, Lane. And so in addition, some of the resources we've shared, the PDF in English and Spanish is a list of basically the steps folks need to be taking now to be ready. And to kind of reiterate what we heard, right? Folks need to know who their servicer is. Some of the loan servicers went out of business during the pandemic. Big loads of people's accounts got transferred to new servicers. If somebody applied for public service loan forgiveness or went to certify their employer, they may have been shifted to Mohila, which handles all of those accounts. So know who your servicer is and go to their website to make sure your information's updated. When you're at that website, when you're looking at your loan servicer, check your mail inbox, because if you're like me and you set to paperless communications a long time ago, you may not have gotten anything in the mail about an upcoming bill or your new payment. And that's where you're going to find that information. And speaking of payments, make sure you're on the payment plan you want to be. FSAid, the studentaid.gov is a great place to start to see information about what kind of loans you have. You'll be able to find there what type of payment plan your loans are currently on, and you can apply for the SAVE plan or other plans, or use the loan calculator there. And lastly, explore cancellation options. The public service loan forgiveness is one that applies to many, many folks. And the first step is to get your employer to certify that you work there. There's a certification form that you download and submit. So if you look in the chat, you'll see there's a link to our next phase, which is a Q&A today in about 5 minutes. We'll start at 1 o'clock, and this will be a traditional Zoom meeting where we can see each other. Folks can come off mute. We'll do a raised hand process so folks can ask questions, and to the extent that Lane can, Lane will be with us for 30 minutes to answer questions. Huge thank you to our interpreters today, Mark and Martine. Big thank you to Lane. Thank you to my colleague, Megan Quintrell, who has been behind the scenes supporting the webinar today. And with that, we will, again, last thing, if we have your email address, we will be following up with the links and some materials. And we really appreciate you joining us today and hope to see some of you in a few minutes. So with that, I'm going to end the webinar. Thanks, everybody.